have Alexander, who is True Domains on Twitter. Alex, how's it going, man?
I'm doing fantastic, man. How are you guys?
Excellent. Glad to be here. We have a Web3 oriented panel today.
It's saying the
Because
broadcast is not available.
yeah,
Hold it. Sweet. Yeah, you might want to check that. Sorry, cut you off.
well, it might just be because it just went live. We'll give it a second or two. Uh, but yeah, we've got so Alexander has a background in ENS domains, and he's been working with Web2 domains as a domainer for the past 2 years or so. So he's run the full gamut. He's done, he's seen both sides of the coin,
All right.
and he's also done some journalism and writes a bunch on the space. So he'll have a ton to share with us today. And Ish himself is also, flip-flopped between ENS and Web2 domains. So these guys have a ton of experience. They've seen the good, the bad, and the ugly on all kinds of domains. So, yeah, Ish, I can see it fine. The one that's on my
Let
Twitter
me
right
look.
now.
Let's see. If for
I'll,
some reason,
I'll
yeah,
send it to you.
share one more time. Let's see.
Yeah, I'm putting it to your Twitter.
Okay, cool.
And Alex,
Yeah,
you
good
can
to have you,
share it on
Alex.
your Twitter.
Awesome. Yeah, I'm gonna share the room. Let's do it.
Yeah. And guys, later in the stream, we will do some Q&A. So if you have questions, drop them in the chat. And also you can, towards the end of the stream, we'll have you share some of your domains. And we'll roast them live on air. We'll tell you, what we think of them, if they have prospects, if we think you've wasted all your life savings buying them. And we'll give you some ruthless, honest feedback to help you become a better domainer. So you can add that into the chat later today. So one other thing before we get started, it is $5.com Friday at Unstoppable Domains. So you can drop on over with all the newfound domaining knowledge that you gather from this podcast and apply it and register up to 100.coms for $5 each. And you can do this every week, no promo code, no strings attached. We are just trying to get people in and use the product. So come on by and do that. We also have $5.50 transfers for .coms. $5.50 off every transfer. Insanely cheap. And $1.xyz Wednesdays. And for existing customers, you can refer a friend, and both of you can get up to $1,000 in free transfers. So you're just awash with deals from Unstoppable at the moment. So go take advantage of those. And without further ado, Alex, why don't you walk us through some of your background and let the people know what you're about?
Yeah. So, hey guys, my name is Alexander. I'm a writer, domainer, and speaker. And so, I really got my start in the space by actually figuring out the whole crypto blockchain field. Right? So I would say this is around 2020, 2021. You had the whole NFT craze going on, whole NFT boom. I did a couple of interviews during that time, and one of them was actually with this inventor by the name of Ron Klein. And so I bring that up because this guy was actually the creator of the credit card strip. So he had created the credit card strip, the MLS service, and the bond quotation system. So I asked him, okay, I'm like, what's the future of finance? Because I was very inquisitive, trying to figure out, okay, where's this all going, right? And so going from that experience, I learned more about trading NFTs, trading cryptocurrency. I had one interaction where I was able to trade NFTs with Carol Baskin. So she was the random lady off of Tiger King. Everything was weird in the NFT days. So yeah, definitely a lot of weird experiences going on then. So went from that to really understanding, okay, what is a crypto wallet? And why do I need one in the first place? I see there's a lot of people that have like a .crypto or a .eth. I'm like, okay, well, what's the purpose of this? And you start to realize, okay, there's value in actually transferring digital assets from one place to another. And the value or inherent utility was actually the ability to do that with just a domain name. So learn more about that. Did a lot of writing for Web3 domains, and that is where I had like a lot of interesting interviews with people like Ish, Shane, people like Anthony Stornetta. And a lot of people don't know him, but he is actually one of the people that are in the Bitcoin white paper. So just learning about all these different crypto and digital assets led me to domain names, led me to first crypto wallet addresses. And then that actually led me to Web 2 or traditional names. So I got into the space. I met Ish. He was killing it in the domain game. I mean, actually like killing it. And so that was what actually intrigued me to say, okay, let me go from what I know as Web 2 domains, or let me go from these Web 3 domains to actually traditional names or Web 2 domains. And yeah, rest is history. So.
And
Yeah.
it's been quite an interesting journey just watching you evolve. I think one of the things that I can share is you're very forward thinking, but you realize that there was more value in the more conventional names, and now we're seeing the convergence of Web 2 and Web 3 assets, right? The Web 2 domains now have all these blockchain features enabled in them. So
Right.
it's been, the space itself is evolving.
All right.
Go ahead, Brady.
Yeah, well, Ish, it sounds like you two have been quite close, and you helped Alex like transition into Web 2 domaining. I'm curious to hear about from either of you, points of difficulty you found early on, Alex, and some key advice that Ish may have given you, or anyone may have given you that set you up for success.
Well, I'm going to be honest. This man was pretty much a mentor in the space. I started off with the Digital Real Estate Academy, which he had going on at the time, and that's what really led me to say, okay, that there's real value in this. He had shared stories with about him and Ryan Colby, who sold millions of dollars in domain names, and yeah, that was my first real experience saying that, okay, there's something to this. And I would say since then, it's honestly been guiding me throughout the space. I've been seeing his journey as well, and he's very modest. It's just very modest when he'll say, I'm new to this space, but when it comes to it, I can't see anyone out there who's actually consistently doing this. And yeah, then so went from there to the Domainer Expo, where we got to meet out in Vegas, and that was pretty much one of the best times I've ever had. Got to meet people like Paige Howe, who sold Guy.com for $1 million, and all those instances really resonated with me because I started to realize that there's this whole new field, and and so that's how I got addicted to domain names. So that's a little bit about me.
Did you say addicted?
Yeah, addicted. Yeah, so yeah, now
It is
we're
addictive, yeah.
can't get out now. Just,
Yeah. No, but I think there's something to be said about identifying opportunity, and just being open-minded to where the cash flow is.
Right.
As an investor, we have to look at the data, right, and make informed decisions. And I think at the time when I met Alex, a lot of people were sort of like looking at Web 2 as sort of like old technology, as obsolete, and looking at Web 3 as what was going to replace it. And my narrative was more like, no, this is just going to enhance it.
Right.
Web 2 isn't going anywhere. It's the backbone of corporate infrastructure and the internet in general. And Web 3 is going to become another layer in terms of identity on the blockchain. And, while here we are in 2025, and we're seeing all this sort of like fuse together, where we're now seeing domain names on chain, and some people still can't comprehend the concept of that, right? And we're seeing Web 2 domains still being very relevant in emerging fields like AI, and every vertical. And Web 3 domain names are still, true to their core utility, which is wallet addresses. But Web 2 domains also have that capability now, albeit in a more centralized format.
Yeah. Yeah, I think, melding the benefits of both of these technology stacks is where we're focused nowadays. And it is a point of contention. Decentralization maximalists will say, okay, it's got to be all or nothing, right? You need like total disintermediation. You need to, if you really want to disrupt, you got to like get all the power out of ICANN's hands and like have a total free for all. We take a different view, which is more pragmatic, which is that like, this technology can be applied very broadly into a bunch of existing centralized systems and help provide new utility. And decentralization has a lot of pitfalls. You've seen this with like Handshake or some of these other protocols where it's just a field day and there's a huge dilution, and you can't trust any of these TLDs because anyone and their mother can spin up a registry. And so, really like riding the line and being able to, bring the best of both worlds is where we're focused. And I'll share a tweet that I put out just last night. So let's see. Yeah, so this guy, Fulcrum Theory, was saying Web3 domains aren't really on-chain because, on-chain tokenized.coms or any DNS domains that we have on Unstoppable aren't really on-chain because they're not, fully on-chain. They're not, disintermediated via smart contract. They plug into the DNS, of course. And I think this is just like poor semantics here because, when we digitize the dollar, let's say, and you have PayPal, then you have the physical dollar in a bank account somewhere. And to be fair, like most dollars haven't been like physically in a bank account for like many decades. We have like most of them are like numbers in a bank account somewhere. You have fractional reserve requirements, so you don't even need like all of the backing in a bank nowadays. And so one, there was already like not like physical USD, but two, once you bring it online, like just because PayPal has a dollar in a bank account somewhere, like serving as the collateral to your PayPal balance, doesn't mean that's not a digital dollar. Doesn't mean there's not like amazing new utility for me being able to send it across the world in a couple of seconds with recourse and fraud protection and buying crypto with it in their app and all these other cool features that they've unlocked. So does that mean that a PayPal balance, a PayPal dollar isn't a digital dollar because there exists a physical dollar somewhere else backing it up? Absolutely not. That's this is just applying a new technology to an existing primitive that we have and giving it new utility. And to say it's like not on chain is kind of silly. So I think, maybe can you guys speak to the positioning of these different communities on this kind of class of question? I know that the ENS folks are much more maximalist and much more, hard line on decentralization. So maybe you could talk about that.
I can chime in. I think the whole idea of decentralization is more of a theoretical concept than a reality. It's more of a myth. There's no real decentralization anywhere when it comes to naming infrastructure that's practical. You could say, .eth or whatever is fully decentralized, but it's not. Like if you try to expand on the utility and build a website, you're going to put it on a .eth.limo, right, which is an ICANN TLD, right? You're not capable of using a Chrome browser to browse a website. I mean, I can go on and on. So, but the idea that it's decentralized, it's more of a marketing gimmick than the reality, in my opinion. I think, the idea of a DAO is still a social experiment that hasn't always been favorable. A small group of people or cabal determine, renewal fees. They determine, allocation of tokens. They enrich themselves. So when you really, open up the hood and look into the engine, there's a lot of bullshit going on, for lack of better words. So decentralization sounds cool. It sounds disruptive. It sounds rebellious, and that attracts people from a marketing concept. But I mean, look who's getting enriched by building out this so-called decentralized naming systems. And you know, if we're really being fair, there's no need for any type of renewal fees when it comes to Web3 or blockchain naming systems, because they don't have the same hard costs as ICANN naming systems, right? There's no ICANN fees to pay. They sort of operate in a silos. So why do they charge so much for the renewals? That's sort of like milking your early adopters dry. And that's why I think you're seeing a lot of pullback away from, even .eth. Like it used to be massively popular, and now it's just becoming less and less relevant. And I say that respectfully. I'm just saying it based off what we all are observing. There was a time when we saw amazing .eth sales, right? The three digits were going for, a lot of money, right? And where are they now? So I think this whole myth about decentralization sounded very cool, but people are starting to look at the reality and understand that we need checks and balances. We need some element of centralization for sure.
And ENS's stance on integrating with the DNS, right? Like it's just a non-starter because .et is Ethiopia, right? And so ETH is just too close, and so it'll never become an ICANN TLD. And then beyond that, just ideologically, they're very opposed to that kind of thing, right?
Well, it's reserved for Ethiopia. ICANN typically provides CCTLDs, country code TLDs. The syntax is usually two letters. So .ai is Anguilla Island, .us is United States, but they reserve .usa for the United States. They reserve, .et for Ethiopia is being used commercially, but .eth is reserved because ICANN is very forward thinking. As the world, the population increases, you'd imagine that, I don't know when, at some point, maybe this three-letter CCTLDs will be put into use. So there's already a conflict there, right? ETH being Ethereum, but in ICANN's nomenclature, ETH is Ethiopia. And there've been cloud bullshit been put out by ENS. At some point, they said they were negotiating with the country of Ethiopia to acquire .eth. That sort of like died off because it just wasn't true. And I just think that the whole concept of decentralization has been a very deceitful myth.
Yeah, and you realize that it's really a decentralization theater, like you were saying. Most of these protocols have root control, even if they do give power to their holders, like token holders, in the form of voting on protocol upgrades and whatnot. If the core team stopped working, then it all goes to zero. Like there's probably not enough open source maintainers to keep the thing going. And you saw a bunch of fiascos like this, like the Arbitrum Foundation, basically pre-approved something and then had a fake vote for all the token holders to vote on, but in reality, the core team had already passed it. They had already done the upgrade. So it's just it's all meaningless.
Theatrics.
And beyond it being meaningless, the reason that they do this is because centralization has a lot of benefits. You don't want decision by committee. You don't want democracy is actually a really dumb idea in a lot of ways. to give every single person the same voice regardless of their qualifications or how well they understand the issues. If you ran a company like this, you would run it into the ground immediately. There's decentralization makes a lot of sense for something like money, where you really need censorship resistance and neutrality, and you don't want it beholden to the interests of a small core group. But even the Bitcoin blockchain, as decentralized as it is, could coordinate a 51% attack from the core miners, it's all social consensus at the end of the day, which is basically how you run a business. So anyways, Alex, what do you think of the ENS folks? Like, do you see a lot of crossover between ENS and Web3 domainers coming over to Web2 domains now that the NFT craze has died down?
Yeah, it's funny because I'm thinking, and I realized how I came into this space. So I came into this space really because of crypto wallet address and ENS. But then I started to realize, okay, that there's fundamental differences between having a digital wallet address and actually having like something in the DNS realm where you have the ability to build a site on it or redirect it to another location online, and you saw just how massive that market was compared to what was happening with ENS. I do see a lot of crossover though, so it made sense to me. It's funny because looking back on it, like crypto wallet addresses were like really the first NFT that made sense to me, because it's like, hey, it has like inherent utility. I can send crypto from one place to another. But you started to see a lot of different companies just be able to use the inherent TLD and use like a .com, .io, .xyz. You can use all of those for crypto wallet addresses now. So it's funny because I'm seeing a lot of people like evolve in this journey, and of course I'm one of them. Where you had the ability to transition from like, okay, what are these crypto wallet address to okay, what are these don't, I hate to say real domains, but like traditional domains, like just DNS names. And the fact that you have more capabilities and the fact that they're more so integrating, you could see that you have the ability to use crypto wallet addresses, the ability for tokenization of names, which isn't talked about as much as it needs to be in the space, because I believe that it's actually the tokenization of names that will actually lead to so much capital, like billions of dollars of capital in the space, because now you have the ability of collateralization, fractionalization. You have the liquidity of crypto, and that's why you see a lot of people in the crypto space going for the domains. A lot of the massive companies, Stripe.xyz, Circle.com, they understand the inherent need to have something on the internet and to be able to have something like a DNS name where people are able to go to. So I see a lot of different, I would say, similarities between the two, but DNS is getting all the capabilities that ENS had. DNS is getting all the capabilities that a lot of the crypto wallets had, and now there's more things that you can do with them. And so I think that's a massive development that's happened in the space, and not a lot of people are really talking about it. I did a couple of things with Web3 domains, but also with NameFi. And what they were doing is, trying to put more names on chain. And during that process, you start to realize that, okay, there's the utility of having something on chain means faster settlement. Like I said, the ability to fractionalize, the ability to collateralize. And a lot of the insurance, I would say, let me phrase it like this. When it comes to financial markets, there's things that you can inherently see in the financial markets. But in order for something to be really truly an asset, you usually see something like fractionalization, so like shares of stock, or you will see something like collateralization, as far as selling houses and the ability to be able to take out a loan on a name, or I'm sorry, a loan on a property. So
yeah, home equity line of credit.
Yeah, home equity.
Great analogy.
Yeah,
in summary, liquidity.
Yeah, liquidity. And in fact, and Shane was saying this, like the thing that domains are really missing is liquidity and leverage. Like you can't leverage. In fact, Ish will tell you, like, the fact that people were leveraging NFTs, for liquidity and be able to leverage an NFT for just like
During the NFT boom, I was well positioned. I had 4 Bored Apes at one point, and I took out loans for over $500,000 with the Bored Apes, leveraging smart contracts, right?
Right.
In a peer-to-peer setting. And the reality is that technology exists right now with domain names, but in order to facilitate that, those domains have to be on chain. So, frankly, ENS technology, the technology is great, right?
All right.
The technology enables DNS names to be able to go on chain, right? You could take a .com and you can now use it as a wallet address, which coherently means that you can use it as collateral. So I think that you know it's all an application of the blockchain, and adding that to a phenomenal asset class like DNS domain names just opens up a new realm of opportunity for the asset class. So in the near future, we're going to see domains being used as collateral. People were doing that with .eth names. The problem was the value wasn't really there, right? So
Mm.
you saw a lot of defaults on loans, like people were taking loans for 3 ETH because they were doing that as a marketing gimmick, and there was no need to pay back that kind of loan because the domain itself wasn't worth anything, right? But in a peer-to-peer setting, in a more mature asset class, I mean, we see domains selling for 200,000, $2 million
Right.
consistently, right? Every day, right? And these are just the reported sales or the ones that people wanted to sell. So if there's an incentive to take your domain on chain, it's going to be the fact that I can free up some of that liquidity in a domain name by, using smart contracts between a borrower and a lender, and using the name as collateral. And I think that's super exciting.
Oh, and
Yeah.
I was gonna say one thing I would add is like this is two things. This infrastructure is already here, and the fact that people in traditional domains have been doing this for a while, with domain capital. And Page will tell you, like, he was able to secure loans using his domain names as collateral. So I think that it is something that has been done before with domain capital, but it hasn't really been brought to
On
blockchain
chain.
yet.
Right.
And so that is the real transition. And once people will start to realize, okay, there's an inherent utility in this, that's when it's going to finally click for a lot of people.
Yeah, and critically, this is the path to broadening that offering that Domain Capital and others have had. My understanding is they only do like oneword.coms, something very easy to underwrite, very stable, and where it makes sense for them to, give out
Minimize the
a
risk.
reasonable interest rate.
Right.
Because I mean, when your portfolio has a 1% sell-through rate, which is good in domaining, then you you have to ask a lot of questions about the financial stability of the person that you're lending to, because their cash flow is more than likely not great, or if it is good, it's very sporadic. So that's a high risk business, that you're lending to. But point being, when you can open this up to not just a single counterparty issuing loans, but instead a marketplace of peer-to-peer lending, then you really open up like people that want to originate loans in a variety of different risk profiles,
Right.
and then you can have like better price discovery or interest rate discovery on those loans. So that's what we're working towards, and later this quarter we hope to originate the first on-chain loan against a domain. And Alex, I know we've been talking a little bit about that. I'm not sure how much you want to share, but if you want to talk about, that would be interesting.
Oh yeah. So as you guys know, and I will save it for another time because I'm really excited for this. But I have been going through this path and trying to get more people that have, I would say, more premium names to understand the value, the inherent value of putting them on chain. And it's funny because way back, I would say like a year and a half, 2 years ago, I was really trying to explain this to people. And it's funny because it didn't seem like a lot of people were really working on it at the time. But you saw people like, I would say, like Brantley, who originated one of the first, .eth loans, and you would see that there was going to be a transition in which people would finally click for people to say that, okay, we should probably bring these on chain. So I did a lot of advocating for that, and I spoke to a couple of people that had, I would say, more premium names like like oneword.ios or oneword.coms, and said that, hey, there's value in this. And so I'm starting to see more companies like Unstoppable, like D3, really try to go into this vertical. And so yeah, now we're going to have for the first time some oneword.coms on the blockchain, and then be able to use them as collateral. And I've been trying to, like I said, I've been preaching this gospel for a second now, but it's finally, I'm very excited to see it all come together. So yeah.
Yeah. Would you yourself be interested in a loan?
Of course, yeah. In fact,
Hey, I will too.
yeah, in fact,
I think we all
We'll
will.
get we'll get you included, Ish. Don't worry.
Hey, shit, let's do it. I think honestly, like that's just super exciting for domainers, because there's so many myths in domain, and I don't know where we came up with this idea that a 1% sell through rate is good. It's not
right.
good at all. Right? Those numbers are kind of like very deceptive. Okay, you
Yeah.
sold 1 out of 100 names, and you could have sold it at a loss. Right?
Right.
Is that still good? You sold 1 out of 100 names, and you sold it for $1 million, and some other guy sold 10% of his portfolio and netted $1,000. You see what I'm saying? So the details are very,
Yeah,
very,
your APY is a better metric.
yeah, just your
Hmm.
bottom line. Honestly,
Right.
your net loss or net profit really matters, and the real biggest hurdle in domain investing is the liquidity.
Exactly.
So, that's the most difficult part. Once you pay for a domain, it's illiquid until you sell it, right? There in the past you had things like domain parking that you could use to sort of like subsidize those hard costs of owning a name, but that acquisition cost is still there. You know what I mean? And the truth is domains are becoming more premium domains are, in my observation, becoming more expensive. There are
Increasing.
more domainers out there right now. People are more aware of the value of a good domain name. And, some of these names, people have a disparity when it comes to what the fair market value is. So if in the meanwhile you can get $5,000 for a domain that you believe is worth $500,000, it's better than zero, right? It's better than nothing. It's something to, it doesn't stop you from still selling the name. It's just you're leveraging that asset to free up some liquidity that you can use to, do other things.
And if I might add, it's crazy because you see people on Flippa that are able to flip names for multiple, not just the name itself, but like something on top of the name. And so if you can really construct a way where people are able to not only see just the value of the name itself, but like what type of revenue is it creating? There's other things that you can do with that, making it, I would say, more valuable, especially if there's like a business on top of it, and you would have more of ability to, I would say, find, as Ish said, peer to peer. That is one of the key things, because you actually have the ability to control, what you're yielding, what the interest rate would be. And in fact, it reminds me, Michael Seiger had actually did this before in the past as well, where he had said that he had basically was able to provide a loan for a name. That's the other thing too, because you have the ability to provide a loan for the name, and then have the ability to control how much yield you're getting from that name, like the I would say the interest rate, and then you have the ability to, if you price it right, be able to sell the name. So he said, so he did two things. He had made sure that, one, there was a high interest rate towards the loan, and he said that he made sure that the names were valuable enough or liquid enough to be able to sell for like 10K, 15K, somewhere in that range, but have that ability. And at the same time, if they default, you get the name, which is beautiful. But if they don't default, then you still get a high interest rate. He said he got like double-digit interest rate from just providing that loan. So there's that aspect of the market as well that is still, I would say, evolving, because people still don't understand the value of these names yet. But with things like peer-to-peer, and the fact that we have the ability to now put these on chain, we're going to really, as you said, say price discovery. We're going to figure out these values, or see, what type of interest you can charge, what are the financials, if you will. So I'm
It's also because
excited.
people get to be lenders and borrowers,
Exactly.
and that's
Exactly.
definitely the lending side is quite lucrative as well. Um, I know that
Yeah,
during NFC lending days, there was a platform called Arcade
Yeah.
at XYZ. It still exists. They had a very generous airdrop. But there were people making seven figures, borrowing, lending money against, NFTs as collateral.
Right.
and you can monetize your domain expertise in a different way now. You know, there's a lot of demand for being able to underwrite these domains, or there will be as soon as these loans are possible. And that's another way for domainers that have all this expertise and good judgment around what names are going to sell and which ones aren't, and understanding, who are the players, who's trustworthy and who's not in the space. Like
Right.
you can put all of that industry knowledge to use, and navigate that game by earning top dollar for your capital as you lend it out. So yeah, because currently you go to a bank, right, and you're like, okay, I want a loan against my domain. They're gonna look at you funny. They're gonna be
You
like, what's a
crazy.
domain?
Security.
Who are you? What's going on here? Is this a scam?
Right.
But professional domainers who have a fat stack, and some lined coffers, they're more than happy to lend out against the right portfolio or against the right domains.
Right.
And it wouldn't require spinning up an LLC or doing a background check on the person. Of course, you could do these things. You'll probably have like an on-chain credit score showing balances and proof of funds and all of these things to help the lender understand the risk profile. But it just makes it so much simpler to be able to spin all that up on chain and then have guarantees around execution of liquidation events, like you were saying, if they need to sell the domain, and if they default on their loan payments. All of this is made much, much easier on chain, and it happens automatically, running on a 99.99999% uptime computer that the blockchain provides. So yeah, very exciting. Did you want to talk about the particular domain that you were considering getting a loan against,
Right.
Alex?
Yeah. Well, because I know that there's a couple floating out there, but yeah, I would say Movie.io is definitely one of the names that I want to be able to experiment with this because I feel like there is value in the fact that one, it's one word. The fact that it's getting organic traffic with the name, it's getting something crazy like, let's say like 8K visitors per month, really. So it's a lot of organic traffic based on the backlinks in the name and the fact that people gravitate towards things like that. And I would have to say that it really really resonates with the crypto space. And there are a couple of companies that are actually interested in building with this name. So I think there's value in one word, I would say .ios, but also like guys, there's a lot of opportunities when it comes to domains. Never really, I would say, pigeonhole yourself. And I feel like that was the problem with a lot of people in the crypto wallet space or in the ENS space, is because they didn't make the transition. But you saw a couple people. You saw Cindy.eth is now selling .com names. You see Sorab, he's selling, I would say, like 555.ai. Who would have thought that would have sold?
I saw that yesterday for almost $20,000.
Crazy.
Yeah, someone put a question. He said, "Hey guys, main issue with domain loans isn't because of any platform issue. It's more because after you get below very high value, for example, one-word domains, the biggest issues are green on a value. Any domains on chain will really change that, unfortunately." I actually disagree. The scenario we're describing is called a peer-to-peer marketplace, and a peer-to-peer marketplace means that it's an open marketplace. If you are delusional about the value of your domain name, then you need to correct that expectation, right? If your domain has any value, the market would dictate that, and as that becomes more expansive, as more people start using that, you get more offers. So I think putting domain names on chain actually will solve that versus not changing anything. As of today, right? If you want to get a domain loan, very, very few entities exist. You mentioned domain capital. So you're subject to just their terms, right? If they say the name is not worth anything, it's not worth anything. But in the peer-to-peer marketplace, you have more options, and you also get to participate as a lender. So, in terms of like determining values, there has to be some objectivity and some practical expectations that people have to have. Like, if you think a name is worth $5,000 and you think you're going to get a loan for 5,000, that's delusional. But if you think your name is worth $5,000 and someone is willing to loan you $100 for that, that's how peer-to-peer marketplaces work. You're just simply using the name as collateral in the expectation that you might default on the loan. The lender has to have some sort of leverage that they can use, in the event of a default. So I don't think this suggestion is accurate. Expectations in terms of like the value are determined in a peer-to-peer marketplace. So if I go out there and I say I was able to do $500,000 worth of Bored Apes in loans, because I asked for reasonable prices. I wasn't asking for $1 million when the asset wasn't worth $1 million. I got $500,000 because the asset was worth over $1 million, right? So someone was like, if you default, I win. If you don't default, I make interest, right? You have to put the lender in a win-win position. So what Epic did years ago has nothing to do with anything. The same person is saying Epic did this many years ago, but it never gained momentum because domainers are delusional for the most part. There's a new wave of domainers coming in that have on-chain knowledge and experience. And there's a new crop of domains coming in. So as of today, if I had a means to loan someone $300 for a 3-letter .ai, what am I going to lose if they default, right? I could still lose money potentially, but chances are I'll be fine. So it has to be sort of like a win-win. And I don't care what Epic did in the past. It didn't work because it wasn't on chain.
Yeah, definitely. Which is what I was going to add. The fact that, okay, now you have the ability to be one on chain, but crypto has evolved as a space. And I would say a lot of people are kind of like, there are people that are very bullish on crypto, very bearish on crypto, but there's been a massive, people have made millions and even $1 billion in this space, let's be honest. And a lot of it has been done through, the financial protocols. The fact that you have, something like Tether, where they're putting, U.S. treasuries on chain. And we're starting to realize there's billions of dollars in that. And so what happens when you bring another asset class on chain, but also use it as collateral? We're starting to also see this with Bitcoin as well. You're seeing a lot more people accepting Bitcoin as collateral, not just people in the DeFi space, but actual banks. I believe Coinbase is doing this as well. We're able to use it as collateral. So this is just a transition, guys. And I feel like we honestly, we've been rugged too many times, on I would say BS projects, if you will, and people have been trying to chase, massive gains when we have this inherent utility right in front of us that nobody is using to its extent. And I feel like that's what you guys are doing. So I'm excited,
So the same person is saying, one second.
Yeah, can I respond to this, Ish?
Yeah, of course.
So Adigy who's been prompting with great questions here, is saying, okay, yeah, all this could work, but putting it on chain doesn't really change anything because you're going to have the same problems that Epic did when they had this offering off chain. And there's a few differentiators that bringing this on chain actually provides. So first and foremost, the costs, both deliberate like money costs to spin up these kinds of loan agreements, as well as the technical friction to do it is much lower. So again, like I mentioned earlier, like if you wanted to do this with Domain Capital or whomever, you have to create an LLC, you have to get lawyers, you have to have a vetting process, do background checks. There's an enormous construct that you have to build around the simple fact of taking out a loan. But enormous fees that are involved in doing all of this as well. and then like reporting requirements, all these things. But it's when you put this on chain, basically you're converting all of that to software and putting it into a smart contract that abstracts away and eats the cost of all of these lawyers and processes and things like this. So instead of a lawyer, you have the smart contract, which enforces, quite explicitly in a binary fashion whether or not you're going to get liquidated or not with these, preconceived parameters that you have. You don't need to, go to court if the guy's not paying or something. You can just it'll liquidate on its own based on the predetermined parameters. It also means that all of that reduced cost means that far more lenders can enter the market to create a more efficient price discovery mechanism. And this resolves a lot of the problems we were talking about with, if I only have domain capital to originate the loan, then yeah, it's going to be really hard to find the clearing price at which they're going to do it, because it's a one-to-one transaction. You don't have that's not really a marketplace. That's a atomic transaction that you have. Whereas if you have like 100, it's a pawn shop, and you're just subject to whatever. Best I can do is $1,000 for Movie.io.
No.
Sorry, buddy. Come back later. Whereas if you have 100 or 1,000 potential lenders, then the game becomes much more efficient and much more liquid, and you can find a clearing price that works for both parties. There's a number of ways in which doing this bringing it on chain also exposes you to risk capital in all of the investors and traders and existing lenders that are already on chain and are familiar with these kinds of protocols on Blur or in DeFi otherwise. So you're getting exposure and plugging in to this existing financial infrastructure and to these traders and investors who are already willing to engage in this kind of arbitrage. And it also means that you can build on top of it. So the beauty of DeFi is permissionless composability. It's all open source. It's publicly visible on chain. I can build an app right now that plugs into Balancer or any of the Blur's lending or any of these other things. So potentially you could trade the interest in the loan. And by interest, I mean the ownership of the loan. The lender could sell the ownership of that loan to another investor. So this is how credit card defaults work. If you default on your credit card, then they'll sell it to a collections agency for 30, 50%, don't quote me on that, of the value of the loan, because it's defaulted, credit card company doesn't want it anymore, but someone out there who specializes in collections can pick that up on the cheap and then try to squeeze some money out of it. So that's one tiny example of there's a billion other downstream applications or derivatives that you can build, options against domains. All of these things can be built far more easily in an open source fashion, completely permissionlessly for anyone to take the initiative to build when you bring it on chain. And so it's structurally a much, much, much more nimble environment to build these kinds of financial applications in. So those are a few ways in which doing this on chain makes a lot more sense than doing it off chain.
Yeah,
Ish, what were you going to say?
You hit all the talking points. I was addressing the same feedback in the chat, and I think he's making up some great points and giving us good feedback in terms of what happened in the past. And I think going on chain, in summary, just expands the scope of possibilities, right? You're not dealing with just one pawn shop or one entity. You're dealing with a wider range of potential lenders. You're getting true price discovery, because if the market says this is the best deal, you look. When you put out an NFC for a loan, when NFCs were doing very well, you would receive multiple offers. Some of them will offer you a higher principal and a lower interest. Some of them will offer you a lower interest and a higher principal. So you had an opportunity to go back and go, okay, in this scenario, with the same asset as collateral, in this scenario I can get more money and pay more interest, or I can get less money with a shorter term. I can go back and forth with the person and say, are you willing to do 48 months instead of 36 months at a, you know what I mean? And so the ability to just have more options benefits everyone for sure. And that's really the core thing. And then also, it's trustless. Epic, has some issues where because they're an entity, some people, ended up suing them, right? When it's trustless, it's on a smart contract. It doesn't matter what happens. It's on chain. It's a smart contract. Things happen between people. That's why people end up going to court. There's no need to go to court when you have a smart contract. It automatically enforces the rules that both of you agree on.
Yeah, and if you could see, Epic's proof of reserves on chain, then maybe you wouldn't have, used their platform, right? And we all know a bunch of people that got caught up in that.
Is there
fiasco.
a way to mask or hide the loan amounts so the potential retail buyers could never see it? That's the question he's asking.
Yeah, that's possible. ZK allows for obfuscation of a lot of that data if you put it on chain. So it's certainly on the table. I know this is something that we're learning slowly. We came in guns blazing about transparency and the availability of on-chain data. Where one feature that caused an uproar that we originally put out was on our landers. You can see the price history of a domain, so you can see how much it was registered for. And we're like, okay, we're building a marketplace. Like, don't you want to see all the history? Don't you want to see every offer that was made? Don't you want to see all the price revisions? And we very quickly learned that domainers hate this. It anchors price negotiations lower for retail buyers. And so it also depends if you're building a platform for domainers or if you're building a platform for end users. Of course, if you look on Dropcatch.com, they have a ton of very intricate stats that are built for domainers that otherwise might turn off a retail buyer. So it depends on your audience, but yes, we're sensitive to the conflict between the transparency of blockchains and the competitive edge that domainers want to keep for themselves. So yeah, once we get to that point, we'll definitely be looking into ways to preserve your privacy there. But yeah, so enough about loans, guys. Why don't we do a little roasting of some audience portfolios? So guys, come into the chat wherever you are on Twitter or in Riverside and share some of your domains, and we'll have the panel here go through them and give you some advice. And
well, let me be the first person. I have a domain name. It's domainloans.io. What do you guys think?
Oh yeah.
You bastard! You knew we were gonna talk about this today.
No, I just thought about it. What do you think that's worth after this conversation?
Domain.
Skyrocket.
Is it a good name? Is it bad? Should I drop it? Should I keep it?
I'm no longer telling you any of our product roadmap at Unstoppable
I've always had
because
this name.
No,
this is what happens. He got AIoutbounding.com when oh my god, I need to up my game here, man. I've got this insider knowledge I could be monetizing.
So domainloans.io, I have it listed right now for less than $10,000.
10,000. Okay. Yeah, that's interesting because I would say.
It's what more, right?
Yeah, I would say that I would say 20K range, but also the fact I would say two things: the fact that two-word, but it's also .io. Depending on your price range, I'd say the 10K would probably be the most liquid, but I would jump that up to like 20K.
I'm going to outbound now to a company called Unstoppable Domains. I think they're doing something with domain loans.
Cut us a deal. We'll talk. I'll have my people reach out to you. Yeah. These domainer-centric domains are always funny to me. Like, I always see people shilling like Domainify or I don't know some domain related name, and I'm like, I'm always conflicted. It feels like hubris to think that your very niche interest is like broad enough,
Yeah, that's true.
and they're trying to sell within their own this own cesspool of domainers in their little
Cesspool.
bubble, which
Yeah.
like, I mean, it has its advantages, right? Like domainers, people in the domain space understand the value of a domain, so potentially they're, they're willing to spend more on them, and they also, you have a relationship with these people, so sell into what you know. There are angles in which this makes sense, but I think they generally overestimate the demand for like domain related domains. I mean, we see like the stagnation in this industry. Like there's a handful of new marketplaces every other year or so.
Yeah.
But in general, it's not a very dynamic space where there's
And they
new
generally don't
companies
use the word domain,
popping up.
right? They generally don't have the word domain. Like the new marketplaces are soon pop up. They have names like Aftermarket, Fruits.co.
Hmm.
Um,
Yeah,
you know,
Domain Easy is a great name.
Domain Easy,
Um,
yeah. So,
But yeah, I hear what you're saying.
but no, I thought about domain loans a long time ago because I knew that domains were going to be collateral for loans, and .io obviously being tech oriented. And at some point, I actually wanted to build a similar platform. I also own a domain name which is liquiddomains.com, which
Hmm.
I paid about $3,500 for that name at one point because I was building something like this, and then I decided, okay, this is a bit technical. There was a gentleman who had an NFT loan marketplace um, that we were building something similar. He owned liquid.domains, and we just basically he went through the whole ICANN process and got frustrated. So when I saw Unstoppable was doing something like this, I just said, okay, you know what? They have more resources, and um, I'm sure knowing Matt, this is going to come into tuition. And here we are. We're getting closer.
We are right there. It's great to be a part of because
And
yeah,
and shout out to the guys who innovated in the Web3 space too. What was
yeah,
that platform that allowed people to borrow loans against their .eth names? What was it called?
yeah. So there was Teller. There was
Teller, yeah, Teller.
yeah, Teller.eth. Had definitely done this. I did some work with Sean Murray, who was also in the space, and he basically was one of the first ones to try this out, where putting a name on chain, then basically doing like a wash loan to see, okay, would it work in the first place? And so that was definitely one of the major transitions. But now, of course, now everybody's starting to realize that this is the next step. So now you have folks like D3, NameFi try to do this. But honestly, the reason that I drifted towards Unstoppable is because I could see the momentum getting there. And then when you guys finally said that you were going on this route, I was like, okay, let me try to reach out to as many people as I can, be able to preach the gospel, and see if we can actually get some oneword.coms, the most premium. Because that was the other thing with just the ENS names. They weren't the most premium names. And there wasn't that much of a marketplace. But for oneword.coms, which everybody, I would say a majority of people can agree, is that there's inherent value in that. So by bringing those more, I would say, premium names on chain, and I see that hockey.com is going on chain, so they're going to be doing some work with that. And like I said, I know that there's going to be more oneword.coms coming, and I'm excited to see Unstoppable do it. So very excited.
And also, Andrew Rosner did something with MJ.com that
Yeah,
was more. It wasn't on chain, but it was more a fractionalization play with MJ.com where people could own a stake in it.
yeah,
So that's also part of the evolution of collateralizing names or tokenization of names, I guess. Albeit that wasn't on chain, right? But I think that to me just shows that many people are working towards providing liquidity for domain names. But I think ultimately the on-chain application is going to be the most seamless, trustless, and most productive.
right.
Yeah. The problem with, Rally Road, where he tokenized, where he fractionalized MJ.com, is severalfold, but it really suffers from poor liquidity. And if you had done it on chain, then it can be visible on OpenSea, just like when you come to Unstoppable and you list for sale on Unstoppable, we've built a fork that's backwards compatible with OpenSea's protocol. So when you list for sale at Unstoppable, it's automatically visible on OpenSea, which has like the second largest volumes of on-chain domain trading. So like when you build it on chain, it's just, again, it plugs and plays with existing infrastructure, makes it more visible, lets you tap into those existing pools of capital. And in general, like, you can't build anything on top of Rally Road. It's a closed system. It's totally closed source and run by a single company. So you can't, you're completely bottlenecked by whatever that team decides to focus on at any given moment. And if the company goes under, then poof, there goes your fractionalization. So yeah, okay, we got some other ones. Let's see, proxbt.com. I actually like XBT names. I think XBT is like it's very recognizable in crypto, but I think there's some edge in that no one really uses it. What do you guys think about the Pro XBT?
XBT is the ISO terminology for Bitcoin, so people don't know that, but XBT means BTC. Unfortunately, like you said, the adoption is very low.
And it was the ticker for BTC on Kraken. I think it's still the ticker on Kraken.
Yeah,
and some other old school exchanges used XBT.
Right. But XBT is pretty cool. ProXBT.com. Interesting. It depends on the asking price. The thing about names like that is I don't see a company being called ProXBT.com. I can see that being some sort of like Bitcoin Maxi group. Because I always try to think of what's the utility of a name, like what could the name be used for, and that
XBT Pro would be worth multiples of that.
XBT Pro could be some sort of like software. Some sort of like platform. Or
marketplace.
Yeah, marketplace. XBT Pro is better than Pro XBT, but Pro XBT is a good name. I like that it's a .com. I just think the devil is in the details. Like, what are they asking for?
That's true.
Coffee.
Good names and they're unrealistic asking prices.
Exactly. But I would say you could definitely sell that to someone in, like you said, in the Bitcoin space. So it goes back to like really knowing the niche, and we can definitely know that there's a lot of liquidity in the Bitcoin space. If you just held Bitcoin, you're doing pretty well right now. So I would say 2-5K range. That would be my personal pricing for it. And if you were trying to actually really like liquidate it, then you would go down to like $500,000 names. And there's nothing wrong with that. I think that's another thing in the space and why domaining is so hard is because people have unrealistic expectations. But you'll see people like Bruce who sells names for $500, $1,000, and he just does that consistently, and then that's how you actually gain the liquidity to be able to, or the capital to be able to get better names out there. So,
yeah, people don't realize that momentum is a real thing. If you put yourself in a position where you're selling, even if it's $1,000 worth of names a week, that is such a great position to be in, right? A position to be in because that takes the burden of renewal costs and things like that that domainers dread, right? So we all have the ability to find names less than $100. We're all skilled at that, right? Shout out $5 Fridays, .com Fridays and stuff like that. But where there's a disconnect is where people have unrealistic expectations of what to sell those names for. So when you're connecting with an end user, just price your names to sell. Like they're names that, we're looking for a home run. Speaking of XBT, I have XBTify, XBTIFY.com. $20,000 name. I don't expect to sell that today, tomorrow. If another 3 years if that name doesn't sell, I'm good. But I just think that you have to have those names that I call bread and butter names that you can easily sell for less than $1,000 by doing some sort of outbound effort. And I think those names are clearly more liquid. And you do that consistently over a month, you could do 10 grand plus from your domain investing hobby or business.
Yeah. Um, orderxbt.com from domain sale.
Trash.
Order is like not an action word you hear a lot in the crypto space.
Yeah, that's a trash, man. I'm sorry.
Yeah.
Order
Like
BTC. What do you mean?
buyxbt.com would be a yeah.
Yeah, like
better
what's the
name.
BTC? You order BTC. First of all, XBT is sort of like a concealed name for BTC. So let's just say
Yeah.
it's all. Let's just call it a synonym, right? Are you saying? What do you mean order BTC? Like what do you mean order BTC?
Yeah.
I've never heard anyone saying I need to order some BTC.
Wait, I need to order some BTC. But, you know, you can order it. Hey, look, let me know. They doing deals on BTC now. Let me. Okay.
Yeah, I feel like people with English as a second language really struggle with these kind of synonyms because it seems like they're interchangeable, right? But they carry such different connotations, like order and buy and purchase and all these things. It's one pitfall I see all the time on Twitter or anywhere else. Um, and it's hard. Like, I mean, English has, I think, the most words of any language. Like the granularity of words and meanings in English is much more fine than it is in most other languages. And so even what seems like a synonym coming from another language, and you're just like, oh, you can use those interchangeably. No, they actually carry far different meanings to native English speakers, which is generally who your end market is. And so to fix that, I guess, the recommendation would be, guys, spar with ChatGPT and figure out what the connotation for these words is, and understand like what the vibe is giving off from each of these names, because it like one word, one letter can make all the difference, and synonyms are not totally interchangeable. Is something I see a lot. Yeah. Any other pitfalls? Like, what would you tell a burgeoning domainer, Alexander? What were some of the critical pieces of advice that you got in your early days, or even recently?
I would say two things. One, if you're a new domainer, I mean, if you're experienced with the domains, you know how to sit and wait and you can do that. But if you're a new domainer, I would recommend two things. One, try outbounding your names. I would say there was only really one instance or two instances where people actually, I would say, just purchased the name outright. I think it was like Woman's Data, and then I think another name out there. Really in the ENS space, but that was only because of the digit, so I can't even count that. But I would say when I began outbounding names, that's when I started to see an uptick, I would say, in the interest at least. So one of the first names I outbounded was burrloans.com. And I did that because I realized that there was, buy, rent, rehab. I think it was like repeats, something like that. So that was the initial thought of registering the name, and then began outbounding. I was like, look, I got to get to Domainer Expo, so I'll do everything in my power to be able to do so. So I was like, okay, let me be able to outbound these names. Burr Loans, I looked at it, I was like, okay, let me actually reach out to some people. I reached out to people via Google Maps. I tried reaching out to people via Facebook. So any type of platform that you are, I would say pretty much any type of platform that you're on, and then that that are there communities too. There's always different networks of communities that are in these. Like for example, on Twitter, on Facebook, you'll find these communities that you'll be able to talk to. And so there was this guy in New Jersey that was interested in the name, and so he bought it for, say, it's like $1,000. But to me, someone who tried outbounding and it was just really new to this, like that's good. You know, I don't want to be the person that wants to have to wait for a name to sell, especially when I know that there's someone that actually needs the name. And so that was one of my, I would say, first experiences with that. I would say, second piece of advice, don't be afraid to sell your name, especially if you're new to this. Because at first I really wanted like 5 grand, 10 grand for a name, but that's not realistic actually going into this first time. So I would say, don't be afraid to price your names to sell. I had recently gotten an offer on rickcoin.com, and it was for I think it was like $1,000 for the name, and I was like, nah, you know what? I think this name is 3 5 grand, and maybe to the right buyer at like later down the line, like that's a good price. But for the time being, I had asked for more for the name and then nothing for I would say like 2 or 3 months. So I'm going to be able to reach out to that person again and say, okay, are you would be interested in this name, or try to find someone who I would say was in that niche that would be interested in that name. But sometimes I wish, I just took the offer. And I feel like I could have registered more names that were, I would say, similar in nature that I would be able to outbound to more people. So don't be afraid to, sell your names. I've done a lot of, say, $300 and $500 sales. And I learned that from Bruce. Bruce is I would say, one of the hardest working people out there. He'll, get up at like the crack of dawn and just start, outbounding names. And, if he sells 2 or 3 names for to 500, that's still, you're still looking decent, It's still like a couple of grand for, 4 or 5 names. I feel like that's decent. And then doing that day after day after day. And so that really taught me that in order to be in this space, you need to have really consistency and dedication and really treat it like a business, So those are just a couple of things I learned from Bruce. I learned from, I would say, learn from Ish, and being able to reach out and tap into your network. If you don't have any good names, reach out into your network and see who is willing to be able to work with you. And I've had the ability to, work with other domainers that are saying, hey, would you want to be able to represent this name for me? And so that's how we got names like movie.io, like sat.xyz, which is a recent one, wearable.ai. And that was because, they saw I was trying to do more work in the space. They saw the writings. They saw the fact that I was more interested into the crypto space, and the fact that not only did I have some interest in crypto, but was able to actually outbound and sell names. I think that's what really, pushed it over the edge. But that's the advice I would give. And look, tune in every Saturday. We have a space every Saturday called Brand Hacking with Domains. I've learned so much from that space. It is ridiculous. And we always have, great speakers there. We have Matt from Unstoppable there. We have Michael Duresh, Paige Howe, Shane Culture, all these great speakers that come every Saturday because we're all addicted, let's be honest. And we need therapy.
I'll say we're passionate, not addicted. I think those are great pieces of advice. I'll just add also that, setting the right expectations is what it's about. Like, you hear so many stories about domainers selling names for 7 figures, or some situations 8 figures, but there's nothing wrong with a $500 sale. There's nothing wrong with a $1,000 sale. You got to celebrate all the wins. As long as you're profitable and you're consistent, you'll get there, right? There's levels to this game, but that first sale matters. And the reason why a lot of people don't even get to the point where they're making that first sale is they have the wrong assets, right? I'm looking at someone here saying, what do you think justice4.u is worth? That is simply just a wallet address. Like, you weigh out what that costs you and set the right expectations. What do you think justice number 4.u cost you? Probably cost you $20, right? So why would you want to sell a name like that for $350,000? Is it greed? Is it delusion? It may be both. But if you buy a name and you've done the right research, and there are potentially 10 buyers out there in the wild that could use that name, and you sell that name, you price that name to sell. To me, that's how the game should be played. Realistic goals and then take those steps to turn those acquisitions of domains into consistent sales, and that requires a little bit of outbound. There are a lot of myths that needs to be debunked in domaining because maybe what happened or worked 20 years ago is not going to work in the future, right? So keep up with the new trends. I like the whole idea of vibe coding, being able to build on domains to give people a visual reference of what it could be used for. I like to monetize domains with affiliate marketing. So there's more to a domain than just necessarily flipping it. Like explore all the options and your situation as well.
Yeah. And on-chain domains can be, like Web3 domains can be, you know, very valuable.
Of course.
But you have to know your market. You know, like paradigm.eth, I think, was the most expensive .eth ever. Am I getting that right? That was like, what? Was it
420
several $1 million, right?
420 Ethereum.
Oh yeah. But like, but they knew their end user, right? Like they sat on a domain that is a crypto centric VC that has a lot of money. So whoever registered that name knew exactly who they were going to with that name, and they invested heavily in a single name that made a lot of sense. Whereas if you're just like bottom feeding, then you're not going to be able to sell that name very easily. But yeah, Alex, I heard a couple of good tidbits there. One thing is the old adage, ask for money, get advice, ask for advice, get money potentially.
Get money.
Like so many domainers are just like in your replies trying to sell, or in your DMs like trying to sell you a domain. They're asking for money, right? And then you end up being like, no, bro, but here's my advice. I don't think this name is very good. Blah blah blah. You end up giving advice, whereas they could be doing like what you're doing, what you mentioned, which is just engaging with people, putting out content, generating some value of your own and some own alpha to share. And then engaging in like asking for advice, asking for mentorship, and then opportunities open up. So I was curious. It didn't sound clear to me like how exactly you met some people, you connected with people, and that helped you get movie.io and some of these other domains. Can you explain what happened there?
So the story with movie is, like I said, I did some work with Sean Murray, who's very adamant about, he was also very adamant about the transition from, I would say, the evolution of domain names in general. So we did a lot of work together. We got to speak at NFT NYC, just a couple other places, but I'm sorry, my phone is acting up. There we go. Okay. Yeah. But one of the main things that he was always interested in was domain name collateralization. So helped him out with the first wash loan to be able to do that. And he had put out a post. He had put out an article basically saying, okay, how this was one of the very first to be able to go down this path. And that was actually very interesting to me. So, did some more work in the space, got to work with him and NameFi on another article. And he just posted that. He had posted that, to his Twitter and I think LinkedIn or something like that. I would say a couple months later, someone finds that interview and says, "Hey, well, I would like a loan on my domain name. How is that possible?" Because like I said, we're in a niche space as it is, but not enough people know that domain names are really worth, in fact, maybe millions of dollars. And the fact that, okay, now you have the ability to use them as collateral. So there was another guy that's actually interested in the crypto space. He did, let's say, a lot of different work and a lot of different projects, and he had purchased movie.io. And he had asked, okay, what are some things that we can do with this name? And I feel like a lot of domainers can be open. And he was very open of like, what is the ability or what things can you do with this name? Can you use it for collateral? Can we sell it? Can we perhaps monetize it? And all you want to be able to do from an asset is be able to generate some type of value. So that's how we, began to work together on basically Movie.io, and that had actually led to a lot of other people saying that, hey, that's a really good name. Would you be willing to represent my name as well? And from that domino effect. So I would say to people out there, try to provide value in the space. Like Brady, Matt, they provide value to the space. Ish, every weekend, and basically really nonstop has been providing value to the space, trying to bring more people on, trying to network and connect. But not only that, but be able to actually try to figure out what they're doing. And that has actually led to doors opening by simply, I would say, just providing content, be able to provide information. And if you don't have the information, find the people who do, and that's how you become successful in this. So honestly, like I say, and I say this all the time, shout out to Ish, because that had really changed my perspective on, one, what is possible, and then two, I would have to say that led me to some of my own names and be able to broker some very valuable names. So I'm excited for, like I said, I'm excited for this year. I'm excited for this quarter. I'm excited for what Unstoppable is about to do, because it's about to be very epic. And then people are really going to see what can you do with just a one-word domain. So
It's about time your domains were set free.
Yes.
And able to be used like a flexible financial asset like any other. So yeah, well put, Alexander. Thank you for joining us today. Ish, appreciate your insights. Guys, $5 Fridays is still going for the next 11 hours.
Okay.
So come get some $5.coms. You can also get $5.50 off all transfers, as many as you like. Up to $11,000 in discounts, I think, is the cap. So practically as many as you like. Yeah, guys, we're throwing deals down your throat here. Just humor us a little bit. But yeah, guys, this was great. It was good to explore and dive a little bit deeper on the loans and what the mechanics look like and why it actually makes sense. Adigi, great questions. We appreciate your pushback. The biggest thing here is that we got to ship things. The proof is going to be in the pudding once we deliver you something.
Right.
And until then, it's all talk. But luckily, towards the end of this quarter, we expect to start originating some loans. So you'll be actually able to see how this plays out in practice. And we'll be able to realize a lot of those benefits that we're talking about. Anyways, guys, thank you again for another edition of the Unstoppable live stream. We will catch you next week.
It's okay, guys.
Peace.